demand remains surprisingly resilient and strong. So there's no issue really around the demand side for consumption of crude. I think we always thought that the cutback by OPEC and the non-OPEC group would actually stimulate ton miles, and that's been proven. We've been shipping quite a lot of oil out of the US Gulf to China, so there's been a big ton mile lift. So for shipping, anyway, the issue really is just the additional supply of tonnage. But I don't think it's been anywhere near as disastrous as might have been predicted or expected. Rates are weaker, but the volumes stay high. So all in all, this looks like a year again that could be a bit range-bound. I don't expect to see any huge spikes, and we could have a little bit of downturn during the summer, and maybe that'll carry on into the winter. But on the earnings side, I don't think it's going to be a shocking year, and I think most people have got their predictions right. I think that the question for all of us really is, there's only really one question, and whether it's in tanker shipping or dry bulk or containers, there is only one question. And the question is, what's going to happen in Korea to the shipyard capacity? Because if that empty berth capacity is turned on any sector, that sector can be overbuilt very quickly. So everybody's quite anxious about that. We believe that tankers is reasonably well set up because it's become increasingly less speculative and much more an operator's culture. So staying range-bound on operations, on operational earnings, may well actually be in our interest.
Okay, so starting with China, listen, India has hit a per capita GDP of about 4,000. That has been historically a very good jumping point for increasing car sales. And so we also see India, as being, years ago on the dry side, the dry sort of hoped India would be the next step up, right? The next great economy moving forward. It missed that on the dry, but I do think certainly, on the wet side, I do think there's a higher probability that it steps up. And not only that, but all Southeast Asia, right? They're urbanizing, transportation, and buying cars. You can see what we've done. Our car sales are dramatic, but our gasoline consumption is down in the States because we're replacing cars. In Southeast Asia, they're not. So I think that whole area of the world is actually quite good. And then just going back to China, I think their CAGR rate for oil has been, on growth, has been 14% since '09. They're producing less oil. They're now below 4 million barrels a day. And they'll need oil from further away, right? As the Middle East cracks the barrel and they put out more products, it's going to come from the Atlantic Basin. So I think China, every year we hear that the supply is going to fall, but it looks like they've moderated growth, and that's healthy in the long run.
This year, next year. So I think the order book is, just over the high mid-single digits or so in terms of the size of the fleet. How should we expect, what should we expect to actually deliver this year and next year? And, how does that sort of development persist?
Well, most of it actually gets delivered because we follow the ships that are delayed, and it seems to roll over from one year to the next. And the 20% that was delayed last year rolls into this year. So, the order book is certainly problematic. I think the hope on our side is the scrap continues to go up, and now it's at 380 or 385, and some of the old ships get cleared out. But it's it's definitely problematic, especially as we get towards the end of this year. You have low barriers to entry. You don't get economies of scale above 20 or 30 ships of any significance. You have no technological advantage. We're commodity priced for moving assets around the world, so it doesn't lend itself from a classical sense to any rational consolidation on a massive scale. And if someone is able to maintain a market position where they get a price advantage, you'll get eroded away by people buying more ships. And I think also if I'm a ship owner and I'm looking to grow my business, I can go elephant hunting and try to merge with someone else at the table, or they can try to merge with me, which is a lot of energy and time, or you can buy single ships or order ships. And if you look at the S&P sheets every week and add up the ships that are purchased on a single or en-bloc basis for 2 or 3 vessels, it far surpasses the amount of M&A activity you see on the stock market or in the private equity deals. So I think, like everyone else said, the commercial consolidation is easier. There are a lot of benefits to it, and whether the owners are involved or not, I think is almost irrelevant, and Patty and I can argue about that later
Yeah.
on, but,
When you want to invest in tanker stocks. So we can look at the last 18 months or so, and it hasn't necessarily been a great investment scenario to be long tanker stocks. But when do you think about buying these? As you're advising, putting yourself into my shoes and advising investors to be taking a look at this group or putting capital to work in this group when they can look other places, when do you buy this?
Well, I think that people often describe it as you need to have faith, or you have to have a view on the market. I don't think that's true. I think the trouble is that we tend to talk about shipping in isolation. Right now, I think anybody who's invested in equities should be quite anxious. If you've got 18 times earnings, equities are overpriced. There's been a huge reflationary buy on the equity side because of the tweets of Mr. Trump. And unfortunately, the market might get trumped, because the problem is this: you've got equities up, you've got interest rates going up on the basis that people think this government's going to have to borrow a lot of money in order to stuff $54 billion into the arms industry. That it's got to build a wall, which I managed to get over this morning to get into the country. It wasn't easy, but then, salam alaikum. I made it.
back to ships, Patty, back to ships.
All of these, politics is back in, and a lot of mainstream business is actually buying into a political story which is yet undeveloped. So there's a lot of risk coming in on earnings forecasts now. Why? Because a lot of the reflationary stuff that was promised and has been tweeted about isn't getting done. And why isn't it getting done? Because whilst people are busy pulling each other's hair out in Washington, nobody's actually staffing government. This is the most understaffed government there's ever been. Just taking the tariff that was being proposed on imported oil.
Patty, we can talk about ships or politics today.
No, it's very important to us.
Okay,
This is very important to us because we talk about the tariffs coming in and the oil patch. Everybody has a lot of different views on it. Nobody knows who to phone up in government to get an answer about what the legislation is going to look like. Two big items coming up within the next 4 years. One is being started by the US, and that's China. Trade war with China would be very, very bad for everybody. And secondly, North Korea is going to come up. That's a massive risk factor. North Korea's got to be dealt with in the next 4 years. Don't forget where North Korea is, very close to all the shipyards of China and Korea. So there's a wild swan element to shipping. Shipping is not as bad as it looks. It's maybe an investment that you should be careful not to miss out on. And trying to call the bottom would make a big mistake. If we're back into an area where we've had our prices fall by 30% in the last year, we've had our share prices penalised despite the good earnings we've talked about, now we see prices beginning to flatten out, we see earnings moderating, you've basically got a position where there is no cost in carrying the stock. With the potential tweaks upside, and with all the things that can happen that will benefit shipping or could benefit shipping, it's something that you shouldn't overlook. And you shouldn't go to sleep safely on the values and the earnings that you're forecasting for your other stocks, which seem to be so invulnerable to the things that we suffer from.
Bob, your thoughts on shipping equities?
I agree with the valuation proposition. I mean, shipping moves quickly. The values move quickly. The charter rates move quickly. And as we all know, it's something we're not contemplating that's going to drive this market 6 months or a year from now. If you look back at all the inflection points, they're all things that none of us thought about. It wasn't that oil is going to move $10. It wasn't that, a few million barrels come from here or there. It's some outside force that none of us could think about in advance. And the only time to buy ships is when they're cheap. And that is the fundamental decision you have to make. I think it's a fundamental flaw of the public companies because they can't raise money when ships are cheap because their stocks are cheap. And eventually, if they carry on that way, it's a fatal flaw in the structure. As a private company, we're able to buy ships when they're cheap and sell them when we want. And we're not forced to grow. We can just sit. And I think the pressure on public companies to grow is really fierce, and it doesn't really lend itself to high stock prices in our business.
And Patty's right. I think the downside risk on the Dow is the probability of the downside risk is a lot greater than the downside risk in any of these shares that you're looking at up here that we're representing.